Good morning, traders, and welcome to your Tuesday market briefing. Today is 20th of May, and here's what moving the major markets today. And we are watching the US dollar, oil, gold, and Australian dollar. So let's start with the US dollar index. The dollar index continued to weaken during the European section, slipping towards the key psychological level of 100. And this follows a sharp pullback last week, and now the index is hovering near the important technical support. And the pressure comes from several fronts. First, the Moody's downgraded the US credit rating from AAA to a AA1, following similar moves by Fitch and S&P in recent years. And combined with slowing CPI and PPI data and weaker retail sales, the markets are leaning towards a more rate cuts in 2025. Still, it is not all bearish. Hopes for further trade deals are helping limit the downside, with US Treasury Secretary hinting that new tariffs may return if the negotiations stall. And on the chart, the dollar's trapped in a tight consolidation zone between 99.17 and 101.05. The RSI is at 45, slightly bearish, and Bollinger Bands are tightening, signaling strengthened volatility. If it breaks below 100, we could see a slide towards the 99.23, and key resistance remain at 101, 100.48 and 101. And next, crude oil. The oil is hovering near $62 this morning after the last week's spike towards 63.48. And oil prices are facing mixed signals. On one hand, there's geopolitical support. Iran has vowed to continue uranium enrichment, and Trump has taken a hard stance on sanctions. But at the same time, the possibility of Iran re entering the oil market, OPEC output increases, and IEA forecast of 1.6 million barrel per day global supply jump this year are weighing on the sentiment. And technically, WTI faces strong resistance at 63.67, which is the 50-day moving average. And on the downside, the support lies at 60.69 and $60. A break below those levels could open the door to 58.83. But if crude oil stabilizes above 62.5, a retest of 63.48 is still possible. Also, turning to gold, gold is trading slightly higher this morning, near 32.35, but remains in a narrow range as three major themes play out. First, geopolitical tension. Israel has launched a new ground offensive, keeping the Middle East risk premium alive. And second, the US credit downgrade is forcing institutional bond rebalancing, which is influencing the precious metals as well. And third, political uncertainty. Trump's comments dismissing the peace talks have reignited the investor caution. And technically, gold has lost its upward channel, and RSI is now below 50, which signals a growing bearish pressure. And support sits at 3,200 and 3,168, with a deeper floor near 3,120. And on the upside, the resistance is at 3,250, 3,275, and the psychological level, 3,300 level. So finally, the Australian dollar. The Aussie dollar is holding just above 0.645, trading sideways ahead of the tomorrow's RBA policy decision. And today's China macro data may add some volatility, but most traders are holding steady, waiting for the next big catalyst. Markets are no longer expecting aggressive RBA easing thanks to the easing of US-China trade tensions. And technically, Australian US dollar is still range bound between 0.635 and 0.65. And RSI is around 55.6. MACD shows light selling, and the pair is testing the support at 0.6415. A break below that opens the door to 0.6347 or even 0.63. And to the upside, please watch for the resistance at 0.6478 and 0.65. So to wrap it up, the US dollar is under pressure as the credit downgrading and the weak data build a bearish case, and oil is holding but faces headwinds from rising supply forecasts, and the gold is stabilizing with geopolitical risk still in play. And lastly, the Australian dollar remains range bound ahead of the RBA decision. So that's it for today's market wrap, and thank you for watching, and I will catch you in the next update.